Today we've got the CEO of ACT Currency Partners to talk us through some of the good and bad currencies, as well as provide a few tips on strategies to approach them. Well, thank you for coming into the studio. Welcome to the Dukas Copy TV studio. Felix, let's just look firstly at the Euro Swissy. What's your thoughts on that at the moment? Because I know that obviously the 120 level is still here. How do you feel about this?
In Euro Swiss we had this unique thing that the central bank of a sudden came. Of course, it was turbulences in place. You know, the financial market and the currencies were moving, and Swiss franc went so extremely strong that they drew the line in the sand, which I thought, I thought that time that was a beautiful, a perfect timing to make this action. But I think, on the other hand, I think it is difficult if central banks going into markets and argue with unlimited resources, they will support this level. That makes makes me a little bit worried, because I think as a Switzerland is a small population, you have 8 million people, and you tell the whole world, look, we can take unlimited resources in Euroland, which is a much bigger market. So I have a little bit of problem in that. So I think on one hand they can hold it, but on the other hand is a difficulty that they need to have the political support. And if the political support, and you know how politicians are, they are once very enthusiastic and say, now it's a great action, we have done right. But if the population goes in and thinks maybe it's not so important, maybe there are some other people in Switzerland who could have a benefit if the Swiss franc would strengthen. There's not just the import and export, it's also, as I said, there's importers. If we import stuff, if we buy stuff from outside, it's very attractive for us as a consumer to have a strong Swiss franc. So I think the line in the sand was good, but if that forever to hold and to argue that they have unlimited resources, it's for me a little bit risky.
Okay, so obviously, this potentially I don't think could go on forever. Could it? If we're looking long term, and the Swiss National Bank, people say, well, they can hold it. It's fine. They can continue to support the Swissy. But if the people, like you said earlier, just in your answer, have a different opinion, surely this isn't something that the support is going to go on forever, is it? If
you ask the Swiss population, I tell you they don't want to have a euro. But if you buy too many euros, I'm not an economist, but if you buy too many euros, we have somehow through the back door implemented the euro currencies in Switzerland. That's how I look at things, and I don't think the Swiss population will have that. So you see, that's the risk that the population start to think different about, and maybe costs too much money, this intervention, because of the risk is going to be too big, and then things can change, and sometimes even overnight. Moving away from the Euro Swiss, if we were to look at, say, other currencies that could be potentially interesting as not just as a topic, but for investors or traders to actually look at throwing their money in something other than euro, or other than the US dollar, or British sterling, and look at perhaps emerging currencies with opportunity and potential. The market shows us a lot of currency pairs at the moment, and they will show us even more currency pairs in the future. We actually are in an environment where the dollar and euro, and let's say the Western world, the old economy currencies are all somehow stressed on keeping values. First of all, currency has to cover 3 spots. One of the key spots for currencies is you pay bills with that. Dollars and euros are outstanding, or the best currencies to pay the bills. Measure values. These 2 currencies are still, everybody knows what the value is of a euro, a value of a dollar, and you can measure and pay all over the world. That works as well. These two factors, that is outstanding, is approved. The third key point of currencies, which is not the top priority, is to keep the value. And I think that is on risk at the moment. Nobody knows what is going to happen to the major Western currencies like dollar, euro, sterling, Japanese. I call Japanese yen like old economy Western world. They're all having similar problems. They're all having putting too much liquidity, putting interest rates down to 0. is that enough? What does it mean to keep the value for long term? So why not looking at other currency pairs in the market which are coming up? I think Norwegian krona has a good environment. They are not overvalued, the currency. It's a little bit exotic. People have no natural understanding for this currency because they maybe have been once there on vacation because they don't know what the value is and they don't know pay bills with that. So they're a little bit afraid of that pair, but they are good currency pairs for keeping value. I would also think about the Polish zloty because they have a good economy. They are not having these huge debts around like other countries around them. So I think these are, and they are not all, they're rather undervalued. So these currency pairs, I think, for longer run, they are attractive. And I think this is what we should think about in the future and for investing, that not just keep eyes on the major currency pairs. There are also new currency pairs around which are attractive for investing.
Some very interesting thoughts there. Thanks very much, Felix, for coming into the studio. That's all we've got time for here on Dukascopy TV. We'll be back next week with more interviews and updates, but until then, have a great weekend. Goodbye.